So is the Oklahoma City market cooling off, or is it just pretending to? The August numbers are in, and they showed that we have fewer homes hitting the market, that buyers are taking just a little bit longer to squeeze and pull that trigger, and that home prices are, spoiler alert, still going up. Yet, meanwhile, in national news, Washington, D.C. is toying with the idea of declaring a national housing emergency, which, quite frankly, we desperately need. So here's the deal. Stick with me for the next few minutes. I promise that you will leave knowing if it is smarter to make a move now or if you're going to let the market sweat just a little bit longer. Let's get into it. The September markets reports. Let's start with the big... This might help. Let's start with the big picture. August 2025. We are still in, technically, a seller's market. As you know, a seller's market is anything with under 4 months, 4 to 6 months of inventory. Once we hit 6 months of inventory, we are in a balanced market. And once we crest over that, we are in a buyer's market. But currently, we are sitting at 3.37 months of inventory, which is down almost 1.5 point month over month. Less inventory, that means buyers have fewer options. Sellers keep a little bit of swagger, kind of like musical chairs, right? Fewer chairs, faster scrambling. Next, our sold to list price ratio is still standing strong at 100%, which is down 1/100 of a percent point, which is kind of like the difference of ordering a Diet Coke and getting a Coke Zero. Basically, they taste the same, but it's just different packaging. Sellers, you're still basically getting what you ask. Our median days on market, however, did have quite a turn, 9.5 points up month over month to 23 days, which means that homes are still selling quickly by historic standards. However, that bump means that buyers are probably just taking a little bit longer to double check their math on their mortgage calculators. Or maybe they're just making sure that the backyard's big enough for a trampoline. I don't know. The headline stat here, the median sold price dropped 2 points month over month to 273. Prices had been climbing, and this is just a little step back that shows that buyers have finally pushed back hard enough to make some sellers adjust. So what's all this cocktail of numbers mean, eh? Buyers, you get a little bit more time, just a touch more time, and a little less sticker shock than you did in July. For sellers, you're still in a strong spot, inventory's tight, list to sold prices are holding, but the days of naming your price and selling in a weekend are falling. Big picture, we are still in a seller's market, but there are cracks that are forming in the armor. All right, let's talk about what the algorithmic gods think that your home is worth. Median estimated property values. For August, we came in with a median estimated property value just over $242,000. That is down 1.5 points over last month, but still up 0.5 point over last year, which means that your house did not fall off a cliff, just kind of slouched in its chair a little bit. Here's how to read that. Month over month, we are seeing a soft dip. So that usually means that sellers got a little aggressive on price, buyers balked, and then the algorithms kind of reset. But year over year, values are still edging upwards, which is the market basically saying, yo, relax, this is stable, this is boringly stable, and boring is good when we're talking about your largest financial asset. So buyers, this means that you are not chasing a runaway train any longer. Prices are not sprinting out of reach the way that they were years ago. Now, for sellers, it means that the market is giving you a floor under your asking price. Values are holding, it's just not inflating like a balloon at my daughter's birthday party. Think of it this way, the OKC housing market is like a reliable best friend. They show up on time, they never overshare, they pay their half of the dinner bill. It's not the most exciting one, but it's definitely the one you can count on. And remember, this is all just an estimated card of the broad, city factors, right? The actual value of your home depends on location, depends on condition, depends if your neighbor is parking a truck in the front yard. So if you want an actual, honest to God, what your house is going to appraise at, click the link below, give me a call, figure that out. We'll run a whole diagnostic, an analysis, and figure out where your house is going to appraise around about $1,000 based on comps. August was not a month of fresh surprises on the new listings front. In fact, it was kind of stingy. Check it out, 1,408 new properties, down a whopping 11% over July. That's not a flood, it's more like just somebody left a faucet on while you left. Our median list price also dropped 2 points to $275,000. Combine fewer new listings with slightly lower asking prices, and you finally get the sense that sellers are reading the room. They know that buyers are not as eager to chase these sky-high numbers anymore, and quite frankly, we're seeing a lot more seller-paid concessions towards buyers' closing costs or otherwise than we have seen in the last few months. Ready for a plot twist? Check this out. Median price per square footage eked up about 1% to $163. Sellers might be lowering their total sticker price. They're still holding on to the value of the space itself. Translation, smaller, well-finished homes are slightly propping up that metric. Now, our total dollar volume came in just over $500 million at $524 million, which is down a whopping 10% over the month prior. So, if you combine that with our worst card ever that I don't frankly give a shit about, the median leaving area square feet, you combine that with the total volume, what do you get? Fewer homes, slightly smaller, slightly cheaper on the headline numbers, but you are still commanding a decent price per square foot, which I do like this card. Don't like this card. So what does this mean? For buyers, it means that the pipeline of fresh new listings has narrowed in August. Basically, it makes every new listing feel like limited edition merch over just your everyday drop. And for sellers, this is proof that you're going to have a lot less company in the just listed club as you did before. But buyers are watching those price cuts closely. If you are too aggressive, you're going to risk that listing sits while everybody else moves. Price accordingly, price based on comps, shoot for actual market value, which we know only is set by what a buyer is willing to pay for your house. All right, let's check in on our markets of active listings. Now, these are homes that were on the markets in July. They're not that had just hit the market, but just might have been hanging out. So in August, not July, scratch that, I'll edit that out. We had 3,068 active properties on our MLS, which is down 1.2% over July. So there are a few fewer options out there hanging out. But here's the twist. Our median list price is up 0.2 of a point to almost $320K. So it's the market equivalent of raising your eyebrow and saying, yes, I am still worth it. But home buyers are not exactly stampeding. 52 days on markets is an eternity for some, especially who had sold in the last 5 years, which is up 2%. More evidence that homes are sticking around just a little bit longer. Buyers, you got a little bit more extra time to measure curtains and argue over paint colors or just procrastinate like everybody else. As for the details, our price per square foot stayed at $169. Sellers aren't really giving up much on perceived value. Total dollar volume slid down to $1.34 billion. And the median size of active homes slipped ever so slightly to 1,900, which who cares? Slightly smaller homes and then fewer of them, but list prices are holding firm. What does it all mean? Buyers, this is the classic good news, bad news deal. So you have fewer listings to choose from, but the ones that are out there lingering a little bit longer, you may be able to negotiate a better deal if the property has become stale. The seller is wanting to sell that, but they're not going to take a lowball offer, but you might be able to negotiate harder as if it were a brand new, 2-day on market deal. And for sellers, honestly, this is just a very gentle nudge from the market that says, be realistic. Yes, prices are holding, but buyers are no longer rushing into bidding wars like they used to. The era of automatic over-asking multiple offer deals is in the rearview mirror, so price accordingly, price with comps, use a trusted real estate professional. If you are selling for sale by owner, call somebody to help you run the comps, do whatever you got to do, or just call somebody to help list your property. I don't know, I don't care, it's not my deal, but just don't price it with the expectation that you're going to get $1 trillion per foot. Let's look at the homes that went under contract in August, shall we? The brand new pendings, and honestly, the numbers are a little sluggish. Not really a crazy summer, but Taylor Swift says it's a cruel summer. So we saw 994 properties go under contract last month in August. That is a 6% drop over July. So that means that fewer buyers pulled the trigger last month. Basically, everybody decided that they were still going to go shopping, but they just couldn't commit. It's like putting your things in your Amazon cart, but then forgetting to check out. Our median list price dropped as well to $259K, down 2.3% over last month. So sellers may be realizing that they may need to sweeten the deal to get buyers off the fence. Contracts did happen a little bit faster too, though. So our median days on market fell to 25, down 4%. So then fewer deals did happen overall, but the ones that did happen happened quicker. Well, that's something better than nothing. Kind of like, fewer people showed up to the party, but the ones that were there were ready to dance. So our detailed layer is my worst enemy. The median living area square feet came down to 1,699. So that basically just means that, buyers are paying for quality, finishes, and location. Here's the detail layer though. Our median price per square foot came up a half a point to 158, meaning that buyers are still paying for quality finishes and locations, but the median home price shrank, to under 1,700 square feet. That was down 2.3% over August. And then our total volume also came down to under 330 million. Pretty meaningful dip in market activity, to be honest. So let's give you the big picture. Buyers, this slowdown means that you are not alone in hesitating. Fewer people wrote contracts and sellers are already starting to shave prices. Sellers, the market is still moving. Homes are going under contract faster if they are priced right, but the volume is shrinking. Beep, 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 beep. Pending deals. The home's stuck in limbo between for sale and sold. We took a pretty big hit last month with 1,170 deals, which is an 11.2% drop. Come on, man. Got this little spinning death wheel. Not quite the spinning pinwheel of death, but what did we forget to pay the Wi-Fi bill? So yeah, basically the backlog of deals is just finally started to thin out. Our median list price also dropped 3.5% to just under $260,000. So sellers are given some ground here. It's not a free fall, but it is enough to show that buyers have more negotiating power than they did a few months ago. You can sense a theme here. The head turner, though, check out this median days on market up 40%. My God. 35 days. That's huge. That's buyers saying, you know what? We're going to think about it. And by think, we mean that we're going to go on vacation. We'll get back to you later. That sucks. I don't like that. Here's some details, though. Price per square foot inched up to $159. Medium size of homes under... Come on, Wi-Fi. The median size has dropped as well, 2% to 1,694. Total dollar volume is down damn near 15% to $392 million. Offers are fewer, they're slower, and they're coming in with more strings attached. I mean, that's a pretty sharp pullback. So what's the read? Buyers, you have clearly slowed your roll. You're taking longer to decide, and you are pushing prices down. Sellers, it is still possible to get that contract, but you have got to be patient. It's now part of the job description. So offers are fewer, they're slower, and they're coming in with more strings attached. In short, pending deals in August felt more like a Sunday stroll than a sprint. Slower pace, fewer deals, and buyers are gripping their white knuckles firmly back on the wheel. All right, let's look at some of the closings from last month, homes that actually made it across the finish line. And this is a metric or a card that's kind of got a split personality. We saw 975 properties close through the MLS last month, up 3%, a slight decline of 2.2% with median sale price to $273K. We did see more deals get done last month than the month prior, but we did see the median sale price drop. So think of it like you've got more volume, but you've got a small discount tag on the sticker sale itself. Our sold to list ratio hold pretty flat, 99.98%. Sellers, by and large, were getting what they were asking. The sellers weren't slashing prices in desperation, but the buyers are also not paying well above and beyond. So here's the trend to watch, though. Our median days on market went up almost 10% to 23 days. That is buyers taking longer, touring more homes, and maybe even writing offers with actual contingencies again, which is wild, I know. On our details slide, our median price per square feet dropped to 157, and the total dollar volume climbed up 4% to 341 million. So more money moved through the market overall, even if an individual home sold for just a fraction less. Buyers, this is your window. This is your time to shine. Homes are lasting longer, the prices softened just enough, and yet you're still seeing a lot of quality that's moving. So sellers, don't panic. Volume is up. You're still getting your list price, but the days of instant, frenzied offers are long gone. Again, the market is not falling off a cliff. It's just stretching its legs. Slower pace, steadier outcome, and a little bit more negotiating, give and take on both sides. Month supply of inventory. This is the stat that tells you who really has the upper hand. In August, we sat at 3.37 month supply of inventory, which is a 1.5% drop over last month, but still a 12.3% jump year over year. That may sound tiny, but in real estate math, that matters. Now remember, month supply of inventory is basically how long it would take to sell through every home on the MLS if we added no new inventory. So if we ceased new listings coming to the market today, it would take 3.37 months to sell our entire inventory on the MLS. 6 months is a balanced market, so we are still creeping up to that, but we are still in seller market territory. For sellers, this is good news. You got less inventory, that's less competition. If your house is priced right and it looks good, then you are still the belle of the ball. But for buyers, it's kind of more of the same headache, right? There aren't enough homes to go around, so expect some competition for the good ones. Now, is this a panic signal? No, this is not like we dropped from 6 months to 2 overnight. The fact that inventory has tightened when we already had low supply tells us that demand is still strong enough to keep the market tilted towards the sellers. Think of it like the last case of Topo Chico at the market. It's not going to be a full-on Black Friday brawl, but if you want it, you better go get it before somebody else does. Let's close things out with our public record sales. These are basically everything that's sold not on the MLS, things like for sale by owners, investors, wholesalers. You got drunk at the bar and you sold your house to your neighbor on the back of a bev nap, things like that. And quite frankly, man, somebody slammed the brakes. We had 643 properties, which was a 41% drop from the month over last. That is not a slowdown. That is a straight up skid mark. So median sold price dropped to 225. The median price per square foot dropped to 147. I mean, everything across the board is down. Even the homes themselves got smaller, down 3% to under 1,600 square feet. And if you follow the money, the story is the same. Total sales volume dropped to 109, just under 194 million, 41% as well. That's another 40.9 here and 40.8 here. That's a massive pullback in dollars here that are flowing through our markets, through investors and off-market deals. So what does that say, right? For buyers, this means that competition in those shadowy non-MLS corners of the investor market has certainly pulled back and cooled down. Fewer investors and off-market players are cutting checks in August. And for sellers, this is a sign that demand pulled back even in the off-market world. If the whole, even the courthouse pipeline slows down, that means that the whole market is just catching its breath. Less investors are out there, stomping deals like they had been in years past. And by the way, I'm just going to call this the Ryan card. I don't know if that guy still watches this, but he's the one guy that said, you know what, man, I'm really glad you did that sold public records card. If you're an investor, this means that there's a lot fewer of you that are at play last month. And who knows, this could be your time to shine. Give me a call if you want. So there you have it, Oklahoma City in August. More listings, homes taking a little bit longer to sell, and prices that just keep marching upward and onward like they did not get the memo about affordability. So if you're buying, you got a little bit more room to negotiate. If you're selling, you're still in control, but do not get cocky. Congratulations, you now know more about the housing market than most people do in Congress. Either way, keep your eye on those national headlines, because whatever happens there can and will ripple into your very own backyard. Thank you so much for hanging out with me. If you liked what you saw, send this to a friend. Go ahead and drop your comments down below, and I'll see you on the next one. Be good to one another.